Hey, Sheila Cahoon here with Michael Hawker from Reliance Financial. And today we are going to be talking about escrow shortfalls. But first, I want Mike to introduce himself. First of all, Mike is a great mortgage person. He has helped me since I've gotten in the business back in 2019. And he's been not only a friend, but somebody, a business partner that I can go to and trust wholeheartedly to get these transactions closed on time, if not before, and done properly. And the reason I came to him today to talk about this is because I totally trust him. And this is something that we're both passionate about. So, Mike, without further ado, can you share a little bit about yourself?
Yeah, thanks, Sheila. Again, Michael Hawker. I'm with Reliance Financial Group. We are a mortgage brokerage based in Troy, Michigan. And we are licensed in Michigan, Texas, Florida, Georgia, and Colorado currently. And I've been in the mortgage business. Our brokerage combined has over 25 years experience in the mortgage industry. And like you said, we put a lot of pride in the work that we do and how we help our clients. And one of the biggest things I try to do is simplify the complexities of the mortgage process and really give people an educated approach to securing a mortgage from the pre-approval all the way to the closing table. I try to simplify the process and make it really easy for people to understand. And also, I love pointing out things in the industry that people should look out for and stay on top of, which is what brought us to our topic today, which is talking about escrow shortfalls, which is happening more and more because, as we know, not only inflation, property taxes, insurance costs, everything related to everything that we spend money on is just going through the roof. And lenders don't really even have solid ways to keep up on the increases, which is causing these shortfalls and causing a big financial hit for consumers. And in some cases, it could make their home unaffordable.
Yeah.
So it's something
Yep.
that we need to talk about, let them know what an escrow shortfall is and how to look out for it and how to be proactive to do everything they can to avoid it moving forward.
Yep. That's perfect. So we're going to get right into it. I just want to share with you that every Monday we're going to be bringing you this Monday Mortgage Mayhem because honestly, it gets a little crazy and understanding all the things that you need to understand about the mortgage process. So we're going to make it so super clear for you and bring you all the education that we can. And if you ever have any questions or if you need a video done based on a certain topic, please make sure you reach out to us. We'll have our information at the end of this video. Without further ado, we're going to go right into what we're going to go over today, and that's the escrow shortfall. We're going to go over what is an escrow account, why does a shortfall happen, and what can you do to prevent it. So first of all, let's go over what is an escrow account, and Mike's going to take care of that.
And like Sheila said, we're going to try to make this super simple and clear for everybody. That's always our goal, and we'll do our best. Sometimes things get technical, but we'll try to keep it real high level and understand and not get too nitty gritty into the details. But basically, what is an escrow account? Most people who currently own a home probably are now familiar with what an escrow account is. But your first-time home buyers, people who have never bought a house before, are dreaming of owning a home. It's one of the big things that differentiates paying rent versus having a mortgage, because an escrow account is something that's different. You're not going to see when you rent an apartment. You're paying your rent. You have your overhead. You have certain things they include, and that's it. It's pretty straightforward and simple. In a mortgage, you have what we call a PITI payment, and it's important to know that acronym. It's PITI, P-I-T-I, or sometimes it can be P-I-T-I-A, PITIA. And what it stands for basically is principal and interest, taxes, insurance, and the A sometimes comes in when you have association dues. You might have a home that's in a neighborhood that has an association established and you have to pay monthly dues, or you may buy a condo that has association dues attached to it as well. So that would be your total payment. But we're going to focus on the T and the I in PITI, which is the taxes and insurance, because that is a payment you make on a monthly basis, which is included in your overall mortgage payment. for the lender to hold on to in what they call an escrow account. So later on in the year, when your property taxes for the summer or the winter come due, or when your homeowner's insurance in every year comes due, they will have enough money in their escrow account that you've been paying into on a monthly basis to pay those big bills for you when they come due, your taxes, property taxes, and your homeowner's insurance. So that's basically what an escrow account is. And Sheila, if you can bring up that one screenshot, I just want to show you on every mortgage statement, you will see it broken down here, principal and interest. You'll know exactly out of your payment how much is going toward your principal for that month, how much is going toward interest to the lender. And then what we're talking about here today is the escrow impound, or taxes and insurance. This number right here is what is a part of your overall total monthly mortgage payment that you're paying to the lender every month in your payment, and they hold on to it in escrow so they can then pay those taxes and insurance when those bills come due. So that's what an escrow account is.
Okay. And just a little backstory about this. I had several people that I've worked with, and they did not work with Mike, but they had
Okay.
after a year, they reached out to me and they said, "Listen, I'm getting hit really hard with this extra amount of money that I have to pay on my mortgage now. What's happening?" And so it's always the escrow shortfall is the reason why that happens. And so again, as Mike alluded to in the beginning, this has been happening more often, and we just want to educate about that. So Mike educated about what is an escrow account, and now we're going to get into the actual shortfall part, right? Are we going to get into that? Why does a shortfall happen now?
Yeah.
Okay. So do you want me to bring on that other thing?
You can bring it up on the screen. That's fine.
Okay.
But what happens is, and I every now and then we'll have a past client call me and say, "Hey, my payment went up. What happened?" And I always right away say, "Well, it's either your taxes or your insurance," because 19 out of 20 loans is a fixed loan. Fixed meaning your interest rate does not change, your payment does not change for the life of your mortgage. Your principal and interest to the bank is not going to change. Now, if you're in a variable rate, I don't want to get into all these other topics and bunny trails. There are some loan products where your rate may change, your payment may change due to the note, but that's few and far between and not what we're talking about today. Sheila, are you still there?
I am.
Oh, there you are. I thought you left me already.
Nope, I was just trying to give you the screen all to yourself.
Oh, no, you're fine.
You got to get the spotlight.
Please don't make this blow up on a bigger screen. Please don't do that. So what happens is your property taxes or your homeowner's insurance, or maybe even your association dues, but those typically are paid separately. But your taxes and insurance are what we're talking about today. They have gone up. They are always going up. And what happens is the lenders do not have a direct line to the counties and the insurance companies. They're not staying on top of these increases. They're just paying the amounts that you've paid into them. But when a bill comes due, if your taxes have gone up, and in most cases, when you buy a home, they assuredly are going to go up in that first spring when the taxes reassess and it's now based on what you bought the house for. There's almost always going to be a tax increase within the first year of owning that home, a pretty significant one. So what happens is the lender was set up in the beginning with the taxes when you bought the house, and a year later, they go to pay your tax bill, and the taxes are much higher, and it eats up all the money they have in the account, and in many cases puts it into a negative because there wasn't enough there.
Right. So in other words, when you close on your house, the mortgage that you're paying is based on the taxes, insurance, and any type of PMI, right, and things like that. That's all based on that amount at that time. So in a year's time, what the county does is based on the sale price that you bought it for. it gets reassessed. And when it
Correct.
gets reassessed, those taxes become uncapped. So when a seller owns the house, the taxes will get capped, meaning they're at a certain level. When the house gets sold, the taxes become uncapped, and they are based on the sale of the price. They're based on a few other things, but like millages and things like that. But primarily, it's the property taxes. So what happens is they go up. They go up significantly. So the biggest thing that I want to share with you is that your mortgage person should be making sure that in a year's time, that mortgage payment, because they should be able to calculate out what those taxes are going to be in a year's time. They should make sure that you can still afford that mortgage after a year, because it's not about what you can afford now. It's making sure you can afford it throughout the year and throughout the next 5-10 years. Is that correct, Mike?
Yeah, it's absolutely correct. And when we I love going live. When we pre-approve buyers, we there's maximum amounts you can get approved for. I don't ever want anybody to max out what they can get approved for, because then things like this happen, and a year later, now all of a sudden you're in a mortgage payment you may have already been struggling to make. And we never want to put anybody into a mortgage that they're going to struggle to make, ever. We can't help what people do after they get into their homes. We can't help. They get their home and they've been waiting. Now they go buy a boat. Now they sign up for the Kohl's card for that 15%. They do all these things and take on a lot more debt. And now it's become harder. Now a year later, when those taxes go up, and now they have sometimes a $200-300 a month increase in their taxes, now their home is unaffordable. So we always try to ensure that we are not overextending what they can get qualified for. Just because you can qualify for a $400,000 home doesn't mean you should buy a $400,000 home.
Exactly. And if you could take anything away from this is just make sure that you're not thinking about just this next year. You're thinking about the next 10, 15 years that you have this house. So,
absolutely.
All right. So we explained to them this document right here, right, which is that what shows up on their mortgage statement, correct?
So it depends. It varies from lender to lender.
Okay.
Most lenders will have, it may not be this detailed. This is a full escrow analysis report. Most lenders will at least have somewhere on your mortgage statement. And the thing is, most people really don't look at their mortgage statements anymore. They're on auto pay. Statement comes in the mail. Who sits there and reads their mortgage statement for entertainment purposes in the morning over coffee? But it is very important, because most mortgage statements will tell you information like this. They will say that there was a required minimum balance, that they have to have a little cushion in there just in case of increases. They do try to build in a little cushion in that escrow account as they're collecting these monies from you. But you'll see down here where it says starting balance, should have been this, but the actual escrow balance was this. And it will say whether or not there's a surplus or a shortage. This is very important to pay attention to, because your statement will let you know if you're trending toward having, and every month you're short. When you buy that house, if the taxes were $200 a month, and within the first few months, you come into the spring, they reassess. Now your taxes went up to $350 a month. Well, your payment is still based on when you close, collecting $200 a month.
Correct.
So now every month you're falling $150 short. They will pay your taxes when they're due, but how long does it take 150 to add up month after month after month? People are finding themselves in thousands of dollars of escrow shortfalls.
Right, because they're paying the mortgage company or the escrow company or whatever is paying that every month, but they need to collect that money from you. So that's where the shortfall comes in, and that's where people are getting slammed with this, $4,000, $8,000 sometimes dollar amount for the next year, right? or
Yeah.
to catch up, right?
And, sometimes a lender will want you to catch it all up.
Right.
Most times, which I've always seen is the lender, let's say the lender comes out and says, hey, just for easy numbers, you have a $3,600 shortfall in your escrow account. Well, that's 3,600. What is that? My math's not real good today. 300 a month?
Yeah, I
300
think
a
so.
month. Yeah. So what they'll do is they will want to get that caught up over the next year. But they're also going to increase your escrow payment to what the taxes actually are, and they're going to add another 300 a month for the year. So now you could have a $500 increase a month in your payment to get that escrow account caught up. Well, would you rather be hit with that and have to deal with it after it's too late? Or would you like to take some proactive steps that can help avoid that, which we're going to talk about in a second?
Right. Right. And that's what's happening with the buyer that I had. She now has this $700 increase in her mortgage every month. And there are things you can do. You can call the mortgage companies and things like that to try and see if they can work with you on that, to try and disperse it. That's what she did. She contacted her mortgage company, and they're dispersing it over the next 24 months, that amount. So she went from paying 1,100 to 1,800, and now she's going back down to 1,400 because she's able to disperse that escrow shortfall over the next 2 years.
Right.
And then after that 2-year period, it'll go back down to normal.
Yeah.
So
you definitely want to call your lender, and your lender will give you whatever. Some lenders might offer different options than other ones, but whoever your servicing lender is, you call them, call the escrow department or the servicing department, and figure out a plan that's affordable to you, and see if they can work with you on that. But we're gonna.
And isn't that the big thing though, Mike? They need to make sure that they're in constant contact with their lender from a proactive standpoint. Like, right?
Right. Now I don't know anybody who does this, but we want to recommend a couple of things that they can do to stay ahead of this. And basically,
so we're going to go over what they can do to prevent it now.
Yep. Look at that. The bullet points read our minds. They knew where we were headed.
Exactly.
So what I advocate, and I'm letting all my clients know this after we close, I advocate that you do this. You're still going to get a bill for your homeowner's insurance. You're still going to get, in most cases, most people have a winter tax bill and a summer tax bill, and you get that in the mail. And a lot of times it'll say this is not a bill, but it's just to let you know what your taxes are looking like, because they're constantly going up. I don't remember the last year my taxes didn't go up. Every year they increase. So what you can do to be proactive is when those tax bills come in and the homeowner's insurance comes in, look at them, know what your bills are supposed to be, know if they've increased or not, and contact your lender. Send that to your lender. I would send it right to the servicing department, call them and say, I'm sending you over my updated insurance, my updated tax bill. As soon as it comes, I'm going to forward it to you. Let them look at it and see if small corrections can be made up front, and not wait until it's too late where you're way in the hole and now you have a massive amount to catch up on.
Yep, exactly. I think that's a great thing that people should be writing down right now. So when you get that statement, it says this is not a bill, and it's your property taxes, right? And they send them out once a year, so everybody gets them.
Yep.
Take that right away. Take it right away and put it in your stack of things to do for the next year. Just like you change your batteries on your smoke detectors. Make sure that you are in constant contact with your lender, to go over the changes in your taxes, the changes in your insurance, because when you have increases in property taxes and in value, your insurances are going to go up as well. So, and honestly, everybody doesn't know from year to year what changes have been made in the government, right? So it's just good to get that reassessment anyways and take a look at that, so you're not going to be hammered in a year's time with a big, huge amount of money that you have to pay.
Right.
So,
Right.
is there anything else they can do to prevent it?
That's really the most effective way is stay on top of your bills. You should know what your taxes and your insurance are, even though it's all built into your payment and you just send the lender your monthly payment every month and it's like out of sight, out of mind. You should know what your homeowner's insurance premium is. You should know what your property taxes are. And when those bills come in, you should be able to know and see and know and acknowledge that there's been an increase and get that over to the lender right away. And I want to give a quick story on how, either way, your payment's going to increase. What we're trying to help you be proactive so we don't get a year in or a year and a half in and all of a sudden we find out there's this massive shortfall. But I just had a situation where we had a client that bought their home a year ago when the rates were much higher, and we had an opportunity to do an FHA streamline refinance a year later to reduce that interest rate by quite a bit, reduce their payment, save them money. Very easy process, an FHA streamline, very limited documentation, no appraisals. It's a great product. But what happened was, if you're going to refinance, we found out that a couple of things happened in the first 12 months of them owning this condo. One, and I'll make this short, but it's important to hear the story. One was FEMA came along and declared a portion of their building in a flood zone that they didn't declare it in a flood zone when they bought it a year ago.
Oh my gosh.
So now FEMA came along and said, hey, there's a creek outside your window. You are now in a flood zone. Now it was
So they basically have to now get flood insurance, right?
correct.
Yeah.
Now, thankfully, there's different levels of flood zones, and this ended up being the easiest level and the least expensive to insure. But the point is, my client got a couple of notices and asked from the lender that this was coming and they needed to add flood insurance. They talked to their association. They basically were told, this is false or this isn't needed. Don't worry about it. So they didn't worry about it. So what did the lender do after not getting responses to multiple notifications? The lender goes and places what they call a mandatory flood insurance policy. Now, this client, when he added his own, it was only an increase of $27 a month. The lender and the insurance companies who auto place these policies don't care. It was $2,800 a year for this placed policy. And what happened was the lender took all of their escrow money to pay this premium to put the flood insurance in place. And they immediately had a nearly $3,000 shortfall in their escrow account.
Oh my gosh.
And their taxes went up a little bit. So now their escrow account was short over $4,000. And since they wanted to do this refinance, in normal cases, if they weren't refinancing, they would have the lender would have let them know they have this massive shortfall. They would have fought with the lender. Ultimately, they would have had to go on a payment plan, increase their payment, and get all this caught up.
Right.
But since they were going through a refinance, they had to bring all that money. This should have been a no cash to close deal.
Wow.
Just an easy flip of the interest rate to a lower rate. They had to bring over $6,000 to closing, bring his own flood insurance, catch up the escrow, pay for that flood policy, which ultimately will be canceled and refunded, but you still got to wait 4 to 6 weeks to get your money back.
Right.
And after only 1 year, this client had to bring $6,500 to closing just to get the refinance done because the escrow account had to be caught up.
Wow.
So this causes a lot of problems, especially when you want to sell or refinance your home. You're getting hit with a bill you didn't know about.
Right. So, I mean, that just goes to say, like, just because you have a lot going on, you have to stay on top of things, or else you're gonna cause more issues for yourself than you want. So just open up those pieces of mail, read every one, even though maybe they won't pertain to certain things. Read it anyways. Make sure that you are staying on top of anything related to your house, because you don't want to be you don't want to be upside down. You don't want to be upside down having to owe more money and yeah. So
Right.
that is just like a sock in the gut. Oh my
And it
gosh.
is. And one more thing in relation to what you just said, which is read everything.
Yeah.
Another problem out there is all of the scam letters that are going out. So you have to be careful what you read. Fortunately, I love the fact that my past mortgage clients, they get something in the mail they don't understand, they call me up right away. And I just had a client call me and said, "Hey, I got this letter." It's funny, but it's not, because we all hear the joke about the phone calls trying to sell you a home warranty or a car warranty. Well, this was a letter, and at the top, these scammers, these companies know who you did your mortgage with. So they put your mortgage serviced by, for example, United Wholesale Mortgage. Now it looks like it's from your lender. And people don't know the difference. And they feel they have to respond, and they need to sign up for this warranty. And my client called me, and I said, I'm glad that you're paying attention and you're reading everything in the mail, but also be careful about what you read.
Right.
And I said, that letter is nothing but a scam. Trust me, a mortgage company is not in the home warranty business. It's not what they do. They're not trying to sell you a warranty, and it's a scam. So be careful with everything you read, but you still have to read everything.
Exactly. I mean, it's just the times that we're in. So with all of that, it was a lot of information. I know. So that's why I'm going to provide my information, and Mike's going to provide his information, because I want people to reach out to us with questions. All of this could be overwhelming, but we will take the time necessary to break it down and make sure that you're completely educated before you hang up that phone or before we part ways in a meeting. Because the biggest the people that lose the most are the people that are uneducated. So that's why it's so important for us to be educating. So my phone number is 586-713-6464. It'll be in the description as well. So you can reach out to me anytime. And Mike, you want to share your info?
If you could put it in the description, that'd be great. But yeah, my number is 248-379-4232. Call or text anytime with your questions.
That's perfect. So we're going to be doing this on a weekly basis. Every Monday, we're going to share with you the Mortgage Mayhem. And our next one is going to be about the FICO scores, the changes happening, the 45-day hard credit pull, just all of the stuff here. So make sure that you tune in every week to our videos. It's all about education for us and making sure our clients and just people in general that come to this channel will be educated about the mortgage process and sometimes the real estate process. All right. Any parting words, Mike?
Nope. Just if there's a topic or some questions that you want answered live on our Monday, please send it to Sheila or myself, and we will read it and do our best to answer it live on our Monday show.
Awesome. And then if you've had any situations with escrow shortfalls, make sure you comment to us. Make sure you're sharing that with us. We like to hear the stories, not because that we like it happening. We just like to hear how it's affected other people. So make sure you comment below with your stories as well. So thank you so much for for coming to our channel and checking this out. And we will see you next Monday.
See ya. Thank you.
All right.